great. Good to see you.
Extremely accurate. Good to see you too, Bob. So, I've been on your stream and, why don't we talk about China? You've been talking about China in your stream. And
Yeah.
do you think that they're going to be able to pull this off? The charts don't look bad after today's action, that there's a possible low coming in. Should people be skeptical, or should they be probing China at these levels? You think we have a
Yeah,
turn?
yeah. Well, I think
Yeah.
my view on this sort of stuff comes as a longtime FX trader, where the one thing you learn as an FX trader is you always want to go against the central bank when they're intervening in the exchange rate,
All right.
because what they're doing is they're pushing against the underlying sort of fundamental private sector forces. And I think seeing direct intervention like this in an asset market is pretty similar to that in
Okay.
terms of the framework that you want to use. Like the reason why they're buying so much is because, well, they have to, because no one wants to, no one else wants to buy, right? Everyone else is selling. And so it's, of course, just in the same way the MOF in Japan can make the yen pop, 5 cents, and then that's annoying if you're on the other side of it.
And they're
Like the
big equity.
Chinese.
They were big equity buyers. So I mean, when the Nikkei was a lot lower, so if you were fading the BOJ's ownership of equities, it
Well,
wasn't
I
real.
would just say, but what they were doing there was that was monetary policy. So if you
Okay.
change, if the central banks change the fundamental policy choice, then that's a very different story than if what they're doing is just trying to intervene in an asset market. It's just the same way as, you want to fade a central bank that's intervening in the currency markets, but you want to reflect, the strengthening of currency. Let's just say if they hiked interest rates 500 basis points, or they hike interest rates relative to expectations. And so I understand that that feels like a little bit of a nuance, but one changes the fundamental dynamics, and one
Right.
is just simply affecting the asset market at that time. Fade the asset market influence and run with the
The
fundamental
FX
policy
influence.
choice changes.
Okay. All right. So, I also saw a headline, and you were right about it. I think you were on Real Vision, and you said the title of the show was, "Is it time to fade bonds?" And I don't know if it was the first. It was the first wave, and then we had a pretty nice rally, Bob. In fact, I want to get your view on it. I'll pull up TLT as a proxy
Yeah.
because I think really this is a big story that actually Jerome Powell has to go on 60 Minutes for the market to believe him, because the market faded him at the last meeting. Yields dropped even after he took March off the table, right? And then we had the employment report, and that helped put in a lower high in TLT up here. See that?
Yep.
All
Yep.
right, so I've been talking about that this is corrective, that we could get something like this from here that would give us 90, maybe
Yep.
88 if it's extreme. So, are our bonds trading risk on, risk off, Bob? And if their nature has changed, is this risk off? What's going on in bonds right now?
I mean, I think they're trading on economic conditions, and actually, I think that that move that was around the employment report is a good indication of where they
Okay,
are.
yeah,
And part of the confusing thing about this is the move down to 93, give or take,
yeah,
the
this
last
one,
sort of push in it, yeah, was
yeah,
really around people positioning for what was expected to be higher duration issuance in the QRA. And we kind of
okay.
got like a confusing mix of things. Like we had a banking crisis, which of course was bullshit.
You mean the New
And it's
York
not a,
Bank? Yeah,
yeah, yeah, which is like one idiosyncratic bank. It's not, it's not a broad based thing. Like on the day that the people who positioned short bonds into the QRA and the Fed meeting were right in
yeah,
terms of what transpired. It's just that they got hit by this other effect, which
yeah.
roiled the markets. And so anyway, we haven't even reversed fully
The
that effect,
the
even though
art is never the if, it's the when, Bob.
it is, it's
Isn't
like, talk about
it?
keeping you humble.
Yeah. So
Oh man.
you think there's more left in yields going higher on the long end?
It sure looks like it. I mean, there's still 125-ish basis points of cuts priced into 24. And if you believe Scott Pelley's voiceover, they're not going to start cutting until the second half of
June.
the year.
Right.
And they're probably not going to cut right on the election day, whatever. They're going to be
Oh yeah.
sensitive around that time
Yeah.
frame. So,
They've
it's
not
going to be
no,
tough.
Jerome said they've never been political and they never will be. So,
I mean,
you know,
I agree
look,
that they are not making decisions based upon, it's not like um it's it's not like Biden calls up Jerome Powell and says cut the fucking interest rate. Like that's not
yeah.
how it works.
But then
Um
isn't that what President Trump did? Didn't he call him? He was
well,
trying to leverage
yeah,
him and
yeah,
fire
and
him.
he told him to buzz off, which
Yeah.
which I think, the more, it's like, the more you tell your kid to not do something, the more they're likely to do it,
Oh, well,
I
I
think.
must still be an adolescent because I respond the same way, Bob.
There you go. See,
You know,
I think we all have that streak, Dale.
yeah, yeah. So, I just want to push back a little bit on that New York bank being a non-issue because if I look at a weekly of the regionals, and I know everyone's very bullish, the Russell, I know some people talking about it doubling, etc. But look at this weekly. So here was SVB down here.
Yep.
And
Yep.
this is when they put the emergency facility in. And, if the emergency's over, why do they still have that facility? And then I don't know if you noticed it, but I had a guest, Tom Mellon, who showed me a chart that for a while it was flatlining, but then all of a sudden borrowing from that facility started to head higher again. So it may still be an emergency, or why haven't they ended the program? And this does not look that bullish unless we get over 52. This could
Yep.
put a little damper on the party. Doesn't it look like a bear market rally to you in the regional banks? Money centers doing better.
Yeah, well, I think we got most of the, when we moved into the 52 on this, it
Yeah,
like basically the post SVB recognition
yeah.
and rebound was kind of done. And it's one of those things where this is probably in the world of picking up nickels or whatever, like, probably 50 is the fair value on across the regionals right now. And what's it at 47 and was up at
And a
52,
half. Yeah. So it's
this
fair
is
value.
this is probably this is probably not a place to spend a lot of mental energy, would be my guess. Like, it's not, the fundamentals don't align with going down meaningfully further. And the reason why that is, a big part of that pickup in borrowing was because there was an arbitrage that the Fed squashed, associated with being able to borrow at a rate that was lower than the deposit rate at the Fed. So you could
Oh,
borrow the rate. You could borrow at the 1 year rate, which obviously, because there's cuts priced in, is lower
yeah.
than the spot deposit rate. And so you could collect, 50 or 50 or so or 75 basis points on that trade, essentially risk free, because you could just pay back the loan whenever you wanted. And so, and you saw the second that ARB opened up is when this borrowing reaccelerated. The real thing to look at in the regional banks is the deposit dynamics, and just
Yeah.
seeing, you see there is that deposits have been flat for, I mean, really have been flat for like 6 months.
All right. So
Meaning
no flight.
nothing's going on. It's not very
Yeah.
interesting on that
Yeah.
dimension.
Maybe since rates peaked, people
Yeah.
don't care as much. Could that be part of it?
I mean, I have spent more time than
That's
most in the small bank world. The reality
yeah.
is that the deposits in small banks are sticky because they're not investment assets. They're transactional accounts,
Okay.
mostly held by businesses and households, paying their bills. Like, it's not, and they're mostly like, most of the reason why they have their deposits there is because that's who gave them the loan, the bank on the street, down the street for them on Main Street. And so the reality is just like a lot less interesting than what the financial press would tell you. Like, sure,
Yeah.
deposits went out a few percent of deposits went out, but the big picture is it's not very interesting. And, mostly these banks are just kind of getting squeezed to some extent because, rates are a little higher and they can't fully pass that on to borrowers, which is why a reset of the prices is fine, like down to 50 from where we were in the sort of low 60s makes sense. But
Yeah.
I don't think this is not the place to spend a lot of
All
money.
right.
Energy.
All right. Okay. So after we wasted 5 minutes, but I won't
Oh,
waste any.
no. Well, I mean,
I
part of being a good trader is knowing where you should, put your mental energy and where you shouldn't. And part of that is actually the most important question is, should you focus your attention meaningfully to trade this market? Like that is actually the
okay.
most important question.
Should I be looking to fade dollar? I was looking for 105 for the last month. We're starting to
Mm.
get near those levels. Uh, can you give me a fundamental narrative on why this dollar rally can end and reverse? Can you come up with anything on that?
Well, I think
There it
it
is.
comes. I mean, the U.S. economy
Yields,
is a lot. What's that?
yields.
Yeah, I mean, I think the U.S. economy is just a lot stronger than the rest of the world,
Okay.
and so that should favor the dollar relative to other currencies from a monetary policy perspective, and from the continued inflow of capital and our, somewhat higher yields are we're actually getting a lot of bond demand from foreigners, which on the margin is dollar supportive as well. So, I think the basic structure of the dollar is tilted on the upside,
Okay.
which is
All
kind of
right.
what you see here. Once we had the reset of monetary policy expectations, basically just been moving higher, right?
Yeah.
Meandering higher.
Yeah. Well, we were stuck in a range until the employment report,
Yeah, yeah,
and
yeah.
and we had a breakout here. Um, but it was a nice advance from down here in December. Everyone was bearish a dollar down here. Everyone was
Yeah.
bullish a dollar up here. I was just wondering if there was any kind of fundamental narrative, and sometimes they don't really appear until a move has been underway for a while. Then there's an explanation. It's like traders live in the future and reporters report
And
what's happening today,
I,
right?
I think the next catalyst here is European inflation numbers coming in soft in the next couple months. That's really which will give the ECB some room to actually cut.
Okay. And that should be
So
bullish a dollar still,
bullish the
right?
dollar. Sorry, yeah, that's the
Okay.
yeah,
All right.
that's
See,
the.
so you can't come up with a reason to be looking for a dollar top at this time. There's
I
nothing
don't
out
see it. And
there.
also, if you zoom out, the valuation here. This is not. This is where I was thinking.
Here,
Yeah, if you go, I don't know,
here's a weekly.
give me a couple years.
There you go.
There you
There's a
go.
few years.
We still are not so toppy in the value from a valuation perspective here at all.
Okay.
So,
All
um,
right. Very important level it held down here, the SPAR level for
yeah.
it. Yeah, that's going to be important. So, why don't we talk about something that's been pretty stubborn that I know you believe in, that it's in your ETF,
Oh,
most
gold.
likely. Yeah, don't you think it's been stubborn, Bob, with the strength in the dollar and what's happened with the yields? I mean, it hasn't
Yeah,
rallied,
yeah.
but it really hasn't given up the ghost yet either.
Well, I think
Um,
I think that's the thing is like gold. I often think about gold trading gold relative to looking at relative to yields
okay.
and the dollar to kind of like try and take out um some of these sort of other factors that drive it. And yeah, certainly if you look since the start of the year, bond yields are
Yeah.
up and the dollar's up and gold's flat. That's, pretty
Yeah.
good, all things
It
considered.
really is. I know it's disappointed people that are buying it on geo stuff, but it has held up. I'm still going to try and stay patient, look for at least one more flush under 2000.
Yeah,
About
we could we
70.
could get
Yeah.
My guess is like more likely than not, the strength in the U.S. economy and the yield, getting a yield back up is going to put a hamper on here. We were down in the mid 1900s, I want to say, I guess, yeah, mid low 1900s
Yeah. In
a couple
December.
months ago,
Yeah.
and that marked a nice floor,
Yeah.
and it was able to bounce from there, and
Okay.
so that's my sense is that there probably is a better buying opportunity here, but overall it's showing pretty good fun, like sort of strength and stability given the
Yeah.
macro conditions. And so
Compared to silver, especially, the gold silver ratio has been very strong to the upside, which
mm.
favors gold over silver. Do you pay attention to silver at all? Someone said it's losing its precious metal status and just becoming like
I don't
nickel.
I don't keep track of silver.
Uh, all
So
right,
it's hard enough
all
for me
right.
to understand gold. I can barely get the
Well,
silver.
you come from the FX world. What do you think about the biggest political hot potato right now in the U.S. being
Yeah.
the border? Do you think there's some way to play U.S. dollar MEX? I've been trying the long side here. Because if we get through some levels like 1740, it's going to look good. And when you look at the weekly, which, the teles telescope, uh, these are higher lows than from earlier. So
Yeah.
could a border shutdown, does Biden have executive powers to shut it down himself, the border?
Oh, I have no idea
Yeah.
from a politics standpoint. I think, and even if he could shut it down, it's a question of whether that does anything. People still come
Everyone's
in.
pretty bullish Mexico. Um,
Yeah, I hear you, and I think in the currency space, the thing that just sort of surprises me is vols are so low. I mean, part of that
yeah,
is because just look at this chart, like the realized vol here
yeah.
is like incredibly low, and so particularly uh downside protection in these names, given how cheap the vol is being priced here and also in China. I don't know if you
Yeah,
looked at CNH vol is
yeah,
like at multi-year lows coming into an election environment. It just seems surprised.
yeah.
I think that's because vol gets priced in context of the recent market action, but um that seems like a pretty cheap bet that's out there.
Yeah,
I
yeah.
was looking at like uh
17
dollar
and you
CNH calls, that
oh,
are
oh yeah.
somewhat out of the money, like in the 7.5 or 7.6 range, which are, pretty cheap, all things considered.
Okay. All right.
Uh
So that would say that China, would they have to intervene for well, are that means they don't have the money to intervene and it would just kind of let go.
yeah, it just depends. Honestly, it depends on the magnitude of the pressure, right? Like that
Yeah.
that's the if you give it a little more history on this, we can see, a range. I think a lot of folks look at the CNY complex and think that there's like, I mean, I don't know how many people said 7 is the line and 6.5 is the line. Like all of these things are the line. That's not how they
Yeah.
manage the currency. They mostly just don't want something like a disorderly acute move. And so the difference between, 7.2,
So we've been
7.3,
there
and seven
before.
seven
We've almost
five
been,
is
yeah.
yeah,
Yeah, we've almost been there. There's what's this?
7.3. Yeah, 7.
37.
Yeah,
Yeah.
737. Yeah, it's 740, something like that. So let's just say there was another round of bearish pressure on the yuan, like them guiding it through 7.5 or 7.6 is not, it's not crazy. There is, of course, the classic speculation that when CNY hits whatever 775, the Hong Kong peg number,
Oh,
they'll
people
unify
have
the
been waiting
currencies.
for the peg to break there forever,
Yeah,
right?
I think currency unification is the
Oh,
uh
I see. All right. So that's what's behind the narrative from the FX conspiracy guys.
Yeah, I think, it's not.
There, huh? It's a good story.
It's a good
Do that.
story. It's a
Huh?
good story. It's a good
All right.
story. And
Let's talk about the best story in the history of finance, the
the
S&Ps.
Qs.
Oh yeah, the Qs too. Yeah, the
Qs.
Qs are
Holy
definitely.
shit.
Let's go with the Qs. Here's Nasdaq 100. What do you do with new money?
Dale, it only goes up. That's what you have to understand.
All right. So what do you do with new money? As a money manager, do you just buy the market?
I mean, I think in this environment, the thing that seems like like a more compelling ratio trade is long stocks relative to bonds.
Okay.
Because you can get market action like yesterday, as a simple example, stocks were close to flat basically, right? And bond
Yeah.
yields moved considerably higher. And that is a reflection of strength in the economy when stocks outperform bonds, and a
Yeah.
reflection of that strength in the economy. The issue is at some point these yields are going to, the yield rise, particularly 15 basis points a day, it does create a drag on the equity market. And so that's the thing that's why I think the better ratio trade is the stocks versus the bonds rather than the stocks. All right. It's been,
All right.
other than that
So we
blip,
could maybe have a little
been pretty good
correction.
trade.
We could have you know how those big round numbers are like magnets, I remember when people were wearing Dow 5000 hats, Bob. That's how old I am.
I don't remember that, but
Yeah, that was a big deal. Well, you were in Pampers then. How could
that's
you remember?
probably
Huh?
right.
All right.
Probably
Well,
right.
all right. Anyway, Dale, stop rubbing it into yourself.
I,
Anyway,
I remember I remember S&P 500 at 666. That's my
okay. Yeah, the Mark
uh
Haynes bottom,
the
which
classic bond.
CNBC. Yeah, they gave it to Mark Haynes. So okay. Do you think we could get a pullback if TLT sells off another 4 or 5 handles? We could get a
Yeah,
correction.
well, yeah, I think we saw basically how this plays out, which is once you get, I should say, in the summer or whatever,
Yeah,
you sort of get the circumstance where once you get rates into the 4 or 5 and above, it starts to have that drag down on the equity market because the
yeah,
concerns on the tightening as a function of it. So my guess is we probably have 30-ish basis point yield moves. So a couple, whatever, what's that? About $5 in TLT, give or
okay,
take.
all right,
That can move without starting to get the stock market spooked. But as we get a little bit above that, that's when you're going to start to see stocks dragging. Of course, you could have discrete moves like we had yesterday, where
yeah,
stocks don't,
intraday, yeah.
fulfill their potential basically as a function of the yield rising.
All right, so should I take profits on my long Nvidia from 200? I'm kidding.
Oh man.
Huh? Anyway, I just do see something developing here. It's a 1 millionth divergence, but I'm not kidding. It's been a while since a 4 hour intraday chart is not confirming. So I'll be looking at
Oh, interesting.
something like even the 2 hours. So for a while, it's been the daily. I mean, it's pretty glaring actually on the daily, the divergence at new highs. And the best divergences are when the RSI stays under 70 for a sell. So this was a confirmed high. This was the first divergence. And since then, we had that 2 down days, and now we're making new highs with RSI under 70. So just a cautionary note. And the other cautionary note would be VIX closing back over 15 is going to be some type of caution signal, according to me, to what I think. And I
Yeah,
want to
that
wrap it.
that VIX chart is interesting because it's
Yeah,
got it's like you can almost feel the buoyancy in the VIX looking at that chart. I mean, you're the technical guy. I've never been so good at it, but
look at how many
sometimes I look
higher.
at markets and have emotional.
Yeah,
This looks like a market that wants to rise rather than fall. Um, And that's the feeling I get in the vol
Yeah.
space in equities.
Well, S&Ps have made how many consecutive higher highs over the, since
Yeah,
December, and VIX has made consecutive higher lows. So
that's a
someone's
very
buying them.
interesting. That's a very interesting observation. Yeah,
Yeah.
yeah.
Bob, why don't we wrap it with, do you think politics are going to be part of this and play a role in the financial markets as we move through the year?
Well, I think the biggest. I don't think the Fed is going to really change their policy. They're going to look at the macroeconomic data and just respond to it, and that's what they do.
Okay.
I think the real question is the policy divergences. Um, fiscal policy. Let's say spending policy is basically the same between the two, which is spend a bunch of money. Like the Republicans want to put money in the hands of rich people and corporate tax cuts, and the Democrats want to transfer money to poor people, but the effect of which is pretty marginal. Like there's going to be a lot of treasury issuance no
Don't
matter.
we need a party that wants to give money to us since we're in the middle? Where's the party
I know.
that
I
wants to
agree.
help
I
the
agree.
middle? Huh?
I hear you. I hear you. I think the real question, the bigger questions um, are on immigration related policies, where there's one candidate who says they're going to close the border, which is going to take 0.5% of labor force growth out of the market on an annual basis, which is a pretty big deal when your natural born labor force growth is essentially zero, and is arguing to deport 5% of the labor force. That would be a hugely influential inflationary force in our economy if anything close to either of those policies occur. And there's a lot of ability for the president to control those dynamics. So that's really the big policy divergence. One is supportive of new immigration and one is highly against it, and that's the sort of thing which is the difference between whether we keep a lid on wages and inflation, or whether inflationary pressures emerge. And so my guess is that's going to be
next year's story.
That's going to be the story that's setting up the story for next year. And that should also add the tariffs thing is a big deal too. Somewhat for China, but I mean, really for U.S. imported inflation, it's going to be that's a big thing. I mean, Trump is saying 60% tariffs on China. I mean, that would be inflationary.
And that's something, Bob, what a pearl and insight on the immigration issue. Most people think about it from their heart or think about it from their wallet, as far as paying for for illegals or their medical help and everything else. But you think about it in economic sense, that we already have a tight labor market. How much tighter it would become if those policies were instituted. That's really great.
The softening of wages has primarily happened at the lowest income cohorts. And those lowest income cohorts went from the tightest unemployment in forever ever measured to some meaningful loosening, because there were 2 million, give or take, folks coming into the country. Obviously not all of them are workers, but we're talking about a relatively substantial flow of workforce loosening up the lower income cohorts. And that's the meaningful impact that occurs. And you just got to be diagnostic when you're trading markets. You're thinking about the macro economy. You just have to be diagnostic. Whatever your personal views are about this policy or that policy, it's not. Who the fuck cares? The markets don't care what your personal views are.
Right.
So you got to put
the power of the market. That's like the ocean.
That's right.
The power of the market. Yeah. What a great interview, Bob. You're looking for people to follow you on X at Bobby Unlimited. Would you like to go to your website? Is there anything, the retail guy, that you're interested in communicating to him on your website?
Yeah. For those of you who want more macroeconomic commentary, as Dale said, Bobby Unlimited on Twitter. I write a lot all the time. And And the other thing is I also have a YouTube channel with various clips. If you can't, if this interview wasn't enough, you can get, 2-minute segments of me talking on various platforms. So definitely that's on YouTube at Bobby Unlimited. Same thing.
See it right here. Okay.
So yeah, there you go. Let's check it out.
And you know what, Bob? I want to congratulate you on being a new contributing editor on CNBC. You're a rock. Bob
I
is a rock
appreciate
star.
that.
Yeah, you're a rock star.
You should. I somehow a little dumb luck ended up in that 4 p.m. slot on Fridays, which is
nice.
is very well watched because I was scheduled to do it when SVB failed, and it just so happens I know a lot about the banking system from my old work around the financial crisis. So a little bit of dumb luck and showing up always helps, right?
You know what the dumb luck is for? People that get to hear you, and CNBC for great content that you bring to it. They're the lucky ones, in my extremely accurate and humble opinion, Bob.
I appreciate it.
All right, Bob Elliott, everyone.
Awesome.
All right,
thanks,
great
everybody.
talking to you, Bob. I'll talk to you soon.
Yeah, talk to you later.
All right, buddy. That's a wrap, everyone. You could join the team in 13 minutes on the Morning Edge. I think that Bob and I and the whole team gave you some edges, so keep them sharp. Adios, and don't just count your pips, count your blessings. See everyone tomorrow. Have a great turnaround Tuesday. Thanks again, Bob.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.